Moving on, how often do you see your projects and what kind of things do you look at when you go and see projects? And Phil, can you tell me that?
Yeah, sure. So we have a policy of 50 investments across our portfolio. Within each of those investments, in some cases, there's multiple different sites or assets, and we'll visit those at least once a year as a lender. And I guess those assets that perhaps need more time and attention, we'll absolutely visit more often. So for me, it's why we do what we do. I think the thing I love about my job is the fact we're investing into real things, and we're seeing real things being built, being operational, delivering critical services to the end users, creating jobs and economic activity as part of them. So that's how we, certainly from a personal perspective, derive reward from what we do. So getting out and seeing that in action is really important. I also think every time you visit an asset, you learn something new, and you'd never approach an investment process or decision in the same way if you, as you would have if you've been to an asset and you've seen it through a construction period, through commissioning into operations. I think that's a really invaluable set of knowledge and circumstances that you bring to an investment process if you're investing in that asset class again. And in terms of what we look at, it's often you can get a lot from just how a site is being managed and run. Is it clean? Is it well maintained? That gives you a lot of confidence in the operators or the owners of the asset treating it with the respect and the care that ultimately you'd like to think the assets that we've invested in are being treated with. I think there's a lot of data points on assets, whether that's the volume an asset is producing, the price being achieved for its services, its operating cost base, that we monitor constantly, whether we're at the asset or not. I think it's only really by going to the asset and speaking to the team on the ground you get that really granular understanding of how things operate and what circumstances might impact the key KPIs and numbers that we ultimately as investors care about.
Yeah, I can really understand the economic and social benefits of these projects, but you really have to be there, and then it really comes home to how they're benefiting the area. Ben, how often do you get out and see these projects, and what are you looking at when you go there?
Well, Annabelle, we don't actually view them as projects. We own actual companies and invest with a private equity style and a strong operational bias. Our team contains some very experienced industry executives who are able to impart wisdom and best practice from their companies to these middle-sized platform companies that we have in our portfolio. So we have monthly management calls with the companies lasting hours in cases. We have quarterly board meetings that are quite extensive deep dives into the performance. We have informal conversations weekly, if not more often. And we're constantly engaged with them by email, touching base on key issues. It's a hands-on style and a deeply engaged style. And I think it offers investors access to private equity meets infrastructure, as it were.
Yeah, that sounds really very exciting, quite honestly, and a major benefit for investors. Now, Jean-Hugues, obviously, you again invested in companies, in listed companies. So you're not going to see projects, but presumably you are going to see those companies and the regulators. What are you out there finding out?
Correct. Yes, we're going to meet with three types of people. Clearly, we spend a lot of time with the management teams of the companies we invest in and of our investment universe in general. We meet with CEOs, CFOs. We sometimes challenge them even, notably on sustainability matters and on strategic directions. So that's a critical part of our job. We actually have several hundreds of meetings every year with the companies in our space. We also meet with regulators and government officials. This is key because it's a space where you have a lot of local specificities. You need to be familiar with the local regulatory frameworks, and that's how also you can identify the issues and where potentially there's a risk ahead of us. And there's a third category of people we talk to is actually the street, I'm tempted to say. We like to have a good understanding of where our own analysis of companies in the space, how this stands relative to the consensus of analysts on the stock exchange. And, it's quite often when the consensus is depressed and the most negative, while fundamentals remain solid, that we identify the best investment opportunities. That is not so different from the situation we are in actually today.
Thank you so much, Jean-Hugues. It sounds great. You're out there seeing the companies, the regulators, but also the word on the street. I like that. You need to know what's going on. I'd really like to thank our managers very much for joining us today. It's been fascinating to hear their views. I'd like to emphasize that we don't know what's going to happen in the future. Investment is for the long term, and it's important to have a well-balanced portfolio. If you are in any doubt, you should talk to a financial advisor. Thank you so much for watching.